Lombard in focus to discuss the third quarter performance. Mr. Gopal Balachandran is Chief Financial Officer of the company, and he's with us now to take some questions. Sir, good morning. Great to have you with us here as always. Prashant this side. So your FY24 net earned premium stood at about 17,000 crores. 9 months 25 number in terms of net earned premium is 14,575 crores. Do you think you can add about 5,000 crores in Q4 to cross 20,000 crores for the full year 25?
So good morning, Prashant, to you and all your viewers. So I think if you look at from an ICICI Lombard standpoint, I think this I kind of talked about even in the some of your earlier calls. I think what we're looking for is, I think on the growth front in terms of premiums, is to continue to see if we can have an alpha over the industry growth. I think we have broadly talked about a range of 100 to 200 basis points. I think that is where we stand. I think specific in the context of net earned premium, I think that has a lot of moving parts because different businesses have different risk retention thought processes. So, but I think where we are kind of placed for is to try and continue to see an alpha over the industry growth of 100 to 200 basis points. And that's what you would have seen even on a 9-month basis. The industry grew on premiums at roughly about 7.8%. Our growth was roughly at about 10.3%. So that's where we are. Different segments, I think each of them presents an opportunity to continue to leverage on that.
Mr. Balachandran, but I know you don't want to put specific numbers, but in the ballpark, this seems doable, 20,000 crores for the full year? In the ballpark.
Yeah, so I think see, what we have largely spoken to the market is in the context of the industry, because as I said, there will be a lot of moving parts in terms of how things play out. So in that context is where I think I would kind of say that what we would largely monitor as a metric is to look at alpha over industry growth. And more importantly, I think what we also keep looking for is how we can continue to deliver sustained return to stakeholders.
Okay. Mr. Balachandran, so the operational performance is very good. The underwriting losses, they've reduced considerably. I think the drop is about 46%. Operating profits have been surging. Just walk us through what led to this. One, I think in the fire segment, you've taken a premium hike. I'm not sure by how much have average premiums gone up in health, but just run us through the trends and what the expectation is for the coming couple of months as well.
Surabhi, good morning to you. And let me again just put this in context. I think again, if you look at this year's 9-month numbers has got an element of, I would say, a regulatory change. For example, effective 1st of October, the regulator has introduced a new way of recognizing premiums for long-term policies, as in to say that in the past, if an insurance company would have collected a premium on a long-term policy, the entire premium would have got recognized upfront. And similarly, any cost of acquisition that you would have incurred would also have kind of got recognized upfront. Effective 1st October, both of them changes, as in to say that the premiums will get recognized on a 1/n prescription. That is to say that it will be amortized over the contract period. And similar will be the case in the context of cost. So hence, when you look at now specific to your point on the underwriting result, given the fact that you had the element of an amortization of acquisition cost over the policy cycle, there is obviously an improvement in underwriting that one has seen. And that's what we also put out specifically as a separate slide, also post our earnings call, to reflect what has been this impact of change consequent to the commissions getting deferred, its impact on the operating profit numbers. So that number is roughly on a profit before tax basis, roughly about 60 crores. But more than the absolute numbers would be, I think I would kind of continue to urge all of your viewers and the market at large to keep looking at more the outcome on the combined ratio, because that's largely a reflection of the insurance operations. And there pretty much we are on track in terms of the glide path that we have spoken about.
Which means that your combined ratio should drop to about 101.5%, right? By when?
So Surabhi, I think I'll put that in context. I think because even in my earlier calls, I think I had kind of indicated that from an ICICI Lombard standpoint, we would obviously want to continue to see our combined ratios better than the overall market. But if you look at the half-year numbers for the industry, which is available at trailing quarter, first half of last year, the combined ratio for the industry was 111. This year's combined ratio is roughly about 113. Now, if this trend line continues, then obviously we can't suddenly see a significant outperformance vis-a-vis the market, while we will continue to have a delta. So hence, I think we are on track, whether it is in terms of growth, whether it is in terms of managing claims, or even in terms of operating outcome. But obviously, I think the trajectory is looking very, very positive. If the industry continues to remain sensible in terms of outcomes, there is no reason why we should not get to that combined of 101.5 or even better than that.
But you've not specified the time, sir. Is it this fiscal, or are you pushing that target to FY26?
So which is why I think we'll have to wait for the results to kind of play out. That's the reason why I said this has to be looked at in context. And then obviously, as I said, if the market responds favorably, there is no reason why we should not get to that combined of 101.5 earlier.
Okay, so just to go back, I'll take your points. One is the regulatory change and the manner in which, the premiums are being recognized. That's been one factor. Overall, you're saying combined ratio will keep moving down. Just that word on, in general, how you see premiums rising. Fire, there's been an increase. On health, what do you see ahead? And therefore, I come back to the point that, will operating profits keep improving going forward as well? And to what extent will that be a function of the hike in premiums?
Yeah, so again,
especially on health.
So that's a great question again. But again, markets are where they are, right? They obviously will remain competitive. And therefore, to that extent, is how we will have to see things play out. But having said that, I think your point is absolutely right. On the insurances that you have been extending to corporates, which is the commercial lines, in the last 9 months, we did see that segment exhibiting price pressures. And that's the reason, unlike the preceding 10 years where we would have normally, ICICI Lombard would have gained market share, this year our market share has remained muted in commercial lines as a category. But the good news is exactly what you referred to. I think effective January 1, the pricing discipline seems to be looking up quite positively. But the real impact of the price change on the commercial lines is something that we will see when bulk of the corporate renewals happen on April 1. But overall direction or trajectory is looking positive in the context of commercial lines. On health, to your specific point, two segments, corporate health and retail health. On corporate health, we continue to see pricing pressure, and therefore, to that extent, from an ICICI Lombard standpoint, our philosophy of carefully selecting risks stays intact, and hence, to that extent, we have actually kind of let go some of the portfolios in the context of corporate health. On retail, I think the investments that we have spoken about in distribution and the launch of new products, for example, in Q2, the new health solution Elevate, that's been received very well. Now there again, if you look at the loss ratio range that the retail health book is exhibiting is around the range that we have spoken about at about 70%. And a lot of work for us, for ICICI Lombard, is happening in the context of claims management. But equally, in case if the portfolio warrants any kind of a price change, we have not shied away from taking one.
All right. We'll leave it there, Mr. Balachandran. Thank you very much for joining us. Pleasure. Thank you. Good luck. Well, the